Comcast's cable network Spinoff signals media industry shift. Comcast shares experienced a modest rise on Wednesday following the announcement of a significant restructuring, the spin-off of all NBCUniversal's cable networks, except Bravo, into a new publicly traded entity. Investor reactions show mixed sentiments. The market's initial lukewarm response reflects uncertainty surrounding the move. Comcast's goal with the spin-off is clear: to shed declining cable assets and potentially boost its stock value. While cable networks remain profitable, they are losing subscribers and revenue as more Americans shift from traditional TV to streaming platforms. These declining assets may be weighing down Comcast's share price, as Wall Street often frowns upon businesses with diminishing revenues and profits. The challenge is ahead. There are questions about whether Comcast investors will find value in the spin-off. NBCUniversal's cable networks generated around $7 billion in revenue over the last year, a small fraction compared to Comcast's total revenue of approximately $116 billion. Moreover, the viability of the spin-off as a standalone publicly traded company is uncertain. If Comcast is offloading these assets due to declining profitability, it's unclear why investors would be eager to buy into a company composed entirely of such assets. Disney faced a similar decision and ultimately chose not to spin off its cable networks. The company determined that the revenue from its profitable networks outweighed any potential benefits of spinning them off. Unlike Disney's cable networks, which are closely integrated with its streaming services like Disney+, NBCUniversal's cable networks have a less direct connection to its streaming platform, Peacock. What SpinCo brings to the table. The new spin-off, temporarily named SpinCo, will likely focus on generating cash and paying dividends to shareholders interested in such declining assets. This approach is more typical of private equity strategies, suggesting that cable networks could eventually end up under private ownership for cash harvesting. However, SpinCo's future may hold other opportunities. Under CEO-to-be Mark Lazarus, SpinCo might negotiate new licensing agreements with streaming platforms now that the networks are no longer tied to NBCUniversal's broader content strategy. Additionally, profits generated by SpinCo could be reinvested into its businesses, such as CNBC and MSNBC, rather than being allocated to fund other NBCUniversal operations.